Morning traders, I'm Greg McKenna. Welcome to Markets Morning. It is a big one today. The 11th of October opens up, I guess, with some carnage on global and particularly US stock markets. The Nasdaq was down 4.4%. The S&P and Dow both down more than 3%. US bonds didn't really react. The shorter end of the curve, the 3s and the 5s, rallied about 5 points in the last hour or so, but the 10s and the 30s didn't really move. Not in a material way anyway. We've seen that these bonds are a big part of the pressure that's being put on stocks right now, and the fact that they didn't really rally, and as I say, not in a material way anyway, is a real sign of pressure coming for the stock market. Now, I'm going to say outright, and in this first minute, that I don't know if this is the big one. Every single dip since Donald Trump has been president has been bought and has been a buying opportunity. I'll show you a chart of the S&P 500, which suggests that 27.40.50 is the key. But when you look at dollar yen, you look at the Nasdaq, you look at the S&P, some of the levels, you look at oil, the levels I've been talking about over the past few days, either are very close to being satisfied or have been exceeded. Now that to me is a point where I start to reduce risk. I'm not one that shoots for the fences all the time. I reduce risk, take a much smaller position and then let it ride. As you know, I've talked about that for the last few years while I've been doing this. Anyway, what we didn't see was as big a reaction in foreign exchange markets as you might have seen, in the same way that bonds were a little bit muted. So, sure, the Aussie dollar lost about 0.5% and was down in the 70.40 region at one point, and dollar yen is down at 112.20, but things could have been a lot worse. Anyway, let's dive straight in. I'm going to start with stocks today because everything feeds from then, and we're going to kick off with the Nasdaq. So, on Saturday, when I did my normal screen, I said 7,400 was the target, and if that broke, then sort of 7,150, 7,190 was what the weekly said, 7,150 something, 55 to 65 was what the daily suggested. Now, we've gone straight through that, and we've come to the 50% retracement level. That's also the bottom of this uptrend. So that's a full round trip. The question now is what's next? And it seems to me if we get another day of selling, now don't forget these moves, these types of moves are, sort of 1, 2, 3, 4 standard deviation kind of moves, and you often get a snapback. We talked about that with oil just recently. We got the snapback, but then last night we got the big move lower. So I don't get more bearish, but what I do recognize is that utter collapses, come after falls. They don't often come from highs. And this is what you got here. Down, 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 utter collapse. And that's the kind of thing. So if you have a look at the weekly, the question is it down, 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 utter collapse? Now this would suggest, this weekly way that I trade, would suggest much lower levels for the Nasdaq. It would suggest to me 60, 68, 66, maybe even 63. Now, it's a long way from here. That's another 10%. So it's a big call. At the moment, though, we are at a full round trip from this move and this sort of 69.95 region. Let's give it 30 points. That's what, 0.5%, 1% from where we are. And let's call it 66.60. If it breaks through 66.60, it starts to get really ugly. For the moment, though, position size reduced, and because initial targets have been attained is the word I was looking for, but couldn't find in my head. Right, so this is the S&P. This is the weekly S&P. This is the chart that I've used in Markets Morning this morning, and this is the chart. Remember when I drew these lines on here and I said they looked ominous? Well, and I said that 27.95 and wrote that was the target. We've now gone through that. We have to hold, must hold, 27.40. If you break 27.40, that would be the first time that we've taken out this trend line. And of course, obviously there was previously this trend line here, and trend lines move all the time. This one's only touched once, twice, 3 times. So it's still a little bit tenuous. But if you break 27.40, then you've got 2700, 26.40, and this trend line down here is 25.89. As I say, I don't know how this is going to play out. The initial move I was looking for has been achieved. But, the big question, of course, for traders is this the start of something much bigger? and it certainly could be. We'll have to wait and see. Donald Trump is raging against the Fed, according to CNBC, and says they're off their rocker or some such words. I'm not exactly sure. Depends on who you read. But overall, that's what we're seeing. So a lot of weakness. A multi-standard deviation move, 3-point-something%. And this level's got to hold sort of the 27. So this is the daily, obviously. 2740 and then 2700. So that's where big support. The medium term, so the 15 and the 30-week moving averages. The 15 week for the S&P is 28.53. The 30 week is at 27.95. So they're still pointing higher. But they would be at risk if 2740 or 2700 was to break. In terms of the local market, and then I'll have a quick look at the DAX. The SPY's utterly collapsed as well. We've got it's gone down through most of the resistances. This level here, which was the full round trip, 59.46. It's at 59.14. One thing with the S&P, remember last year I was saying that if you count 5 waves, you could say 28.50 or thereabouts was about where the top was. There are some Elliott wavitions that say that this could be the big wave 5. This could be the big 5 from the move from the 2009 666 or thereabouts low. If you have a look at that on the weeklies, it looks much better. It looks like it's right on resistance. So 5,900, we'll give it 15 points because it's such an important level. Let's call it 58.85 has to hold. Otherwise, that market looks like it's completely shot. The DAX took out 11.7. 11.7's been this level I've been watching for some time, and I've been talking about. It's now gone. It's 11.6. It does look like it may have substantial downside. And if I was just to have a guesstimate at a target, yeah, it'd be about 10.4 or something like that. I'm going to, obviously, what is it? It's Thursday my time now. It's going to be an interesting end of the week and chart scan on Friday. Anyway, getting to Forex now, and the S&P, the Euro and Sterling caught a bid. Brexit could be done, or at least an agreement to take to the Commons could be done as soon as a week, according to Michel Barnier, who is the EU negotiator. So that's helped Euro find a bit of a bid. It does look a little bit more positive, but it would need to, realistically, it's got to get up through 15.65.70 to start to kick towards sort of 16.20 and those kind of things. But it's made a pardon me. Made a higher high. We'll see how this goes. Last night's high was 15.44. So if you see it trading above 15.44, that would be a sign that the US dollar is starting to weaken. And we have to think about the chance that the US dollar could weaken. What Steve Mnuchin said, and I wrote about this in Markets Morning, what Steve Mnuchin said about the Chinese yuan, or renminbi as he calls it, as I used to call it, but I can never spell it right. What Steve Mnuchin said about the currency value for the Chinese yuan, renminbi, being part of a trade deal is almost unprecedented. But it does tell you what a, what would you call it, interventionist administration we've got and how fractious this might come. Now, dollar yen, and then I'll get to sterling in a minute. Dollar yen has come down. Where to now? If we just draw a Fibbo, so if you have a look at that, so obviously if you're going to do this one with my normal, now can I just say, folks, I know some of you are new viewers, many of you are old viewers. This is why I do that stuff on a Saturday. This is why when I launch properly, I will be, sharing that kind of stuff. This has been a resistance zone that I've identified for a very long time and have been talking about for a very long time. So even though last week I was saying, well, if this breaks, it can go to 116 and that kind of stuff, the fact that it never got up through the blue zone, as I might call it, is suggestive. So 110.70 would be your garden variety expectation, but that might be a little bit overcooked because realistically, it's this move that is driving it at the moment. And on that basis, you're looking at 111.90 or thereabouts Yeah, 111.95 as your 38.2. If 111.95 goes, then you've got the full round trip, which then gets you to this 110.70, 110.30 kind of region. It would depend if stocks have another bad night. If stocks have another bad night, then we'll be away. 9.5 minutes. I'm already going. So let's just get rid of that, because I think that kind of distorts the outlook to a certain extent. And put it that way, we'll just get a standard uptrend. Of course, that's not perfect, but you get it. So, you know, higher, even a higher high, higher high. So the trend is still up. And I'm targeting the high 132s to 133, but that's significant resistance. If it gets through there, then we can have a genuine run. We could have a run into the 134.5, 136, that kind of region. But certainly if we get Brexit, we could easily be back in the 140s at some point. The battler, Aussie, is here. So, you know, it's made a marginal new low, but it's bounced back. So this 70.40 region remains pretty key support. If that breaks, then what have you got there? You've got 71.15, 70.40. What's that? 75 points. And so take 75 point. You know, you're down in the 69, sort of 75 to 85 region. 69.94 is my long held target, as you know. Yesterday we did get that rally. We got the rally to 71.15 that I was looking for. We didn't get any further follow on. We didn't get to 71.40. And then, of course, we sold off. I think the Aussie's done really well. You know, I lost 0.5%, but I think it's done really well relative to what it could have done. Dollar CAD is higher, 130.50 roughly. It's broken that uptrend line, taken out that fractal, starting to look pretty positive in that sense. You know, next target sort of back up here it would be. Kiwi back at 64.40, which is the level that we've talked about a lot in this video. That was the target for a long time. It obviously went down. 64.20.25 is the key. This is the 4-hour chart, so you can see that respected the line, whereas the Aussie went through. So back at 64.25. You know, it does look like it's still under pressure. It depends on stocks. Stocks bounce. If China bounces today, if the Nikkei bounces, you know, then the Aussie's going to turn around, the Kiwi's going to turn around. The Aussie's trying to mount a rally now. It's up 23 points from the low, with you know, the buyers in, you know, dip buyers, those kind of things. But copper fell. Copper fell right out of bed. We'll get to commodities in a sec. Gold still respecting this little wedge. All heck's going to break loose if it breaks topside, because everyone's focused on the downside. It's 12.15 to 12.20 for me is still that key resistance zone. I wouldn't be surprised. I should extend that across. Excuse me leaning in. Hope you're not looking at my nostrils. Yeah, so what do we got? About 12.10. 12.09, 12.10 might be a reasonable target from here. That's still 14, 15 bucks. But I'd expect that to be resistance. Now, copper, still within the range, but right at the bottom of it. If we break this time, if we take out that 273, call it 50, we take that out, we are going to have a big dip. And this is how, see, this is where this MACD approach that I use can sometimes be fraught, feel fraught anyway. So you get your signal and then you get a big reversal, but now it's actually going to make that move down. So if it gets down through 73, sort of 50, you know, 80, 50, 80, then it can run quite a bit lower, I would have thought, back towards the lows. In terms of Brent and WTI, this is also why I'm not blowing my trumpet here. I'm just trying to explain, you know, how I use these things. Because as you know, you watch these things every day. I don't get it right every day. But the process is simple. When a move loses momentum, that's when stops start to come closer to market. That's when you've got to have your fundamentals lined up. And for that, to that extent, I'm not surprised, not at all, by the 9 million build in API crude in the US. And of course, we were already down, and the market is down further after that API data. So that would suggest further, but you know, this is Brent, obviously. I said 82.5. You know, we're roughly there. This is, if I say a move, the best way for me to trade, because this is a stream of consciousness, as I'm sure you can tell. So I don't actually script this. I don't know what I'm going to say. I just say stuff. Like now, I didn't know I was going to say this. But, you know, if I say a level, then that's normally where my, you know, reduction in position size comes in. So, you know, for the S&P 500, it got to where I thought reduction in position. Don't go square, but reduction in position. Oil down to 82.50, I said reduction in position. WTI, if I can find the chart, there it is. Reduction in position, we're at 72.60. And originally this week I said 72.20 to 72.70, 72.14 is the 38.2. That still looks like where it's going to go. That's what the MACD says. That's what my system says. That's what this downtrend, this lower high, even from that day, that's what it says. And so that's where I reduce positions, but still expect that it could go a little bit lower. So we'll keep an eye on that. We're getting into a period where oil, which is another good reason why you just take a 2 or 3% move and run with it, oil is getting really fractious. So where does that leave me? That leaves me with just Bitcoin, I think. That's pretty much everything covered, if I can find the thing. Standard story for Bitcoin, it's not doing anything at the moment because the volatility's washed out, the hype's washed out. Hodlers are holding. New interest in it is not there at the moment. Next time you hear that the SEC is going to do something, of course, it'll break up. At the moment, it's just ebbing and flowing around this sort of 6,400, 66, 6,700. 7,100 needs to break to get it to run. Then we get 7,400, then we get 8,400. On the downside, 5650, 5750 is the key for Bitcoin. I don't think I've forgotten anything. I certainly hope I haven't, but that's it from me. It's a very quiet day. CPI tonight in the States is going to be huge. Last night's PPI, the PPI core accelerated from 2.3% to 2.5%. That's one of the reasons why US 10s are still at 3.23%. That's one of the reasons why US 2s are still at 2.885%. And so on that basis, we need to watch CPI. Because if, again, even though Donald Trump is having a belt at the Fed, if the CPI reinforces what's going on, then we could be under some pressure. But not predicting a crash. Markets, when they are like this, can cause collapses. But that's not my base case. The medium-term trends are up. What I'm doing, taking profit on some of the positions, reducing my positions, and then just letting the smaller position, so I don't even have to think about it, run, and the stop will look after itself. Anyway, good luck. It's a volatile time. You know what that means for position sizing. I'll catch you tomorrow. Bye for now.